In this video, I want to talk to you about how the government's money printing or the money supply increase is so correlated with stock prices and home prices. My name is Adam Muqtadiri, broker with Home Life Bayview, investor and advisor in GTA real estate. Well, we've all heard that governments print money, home prices go up, or asset prices in general go up, but isn't it nice to see it on paper? I've charted this on paper over the last few years to see pre-COVID how much was the money supply increase, or the M2 money supply, which is the index that tracks this, how much that has increased and how much stock prices, the TSX index, which is the Canadian stock market index, and the GTA home price index has increased at the same time. And as you can see, it's shocking that it's exactly the same increase or very near increase that, you know, the money printing that happened over the last 4 years. We're seeing the same increase in stock prices and we're seeing the same increase in home prices. And what's a little bit more interesting also is, you know, typically home prices are a little bit slower to react to the increase in money supply, but what's a little bit faster in reaction time is the stock market, because you can, you know, day trade and like people know printing is coming, they buy stocks, right? So when stock prices go up, that's usually a very good leading indicator for home prices. And if you read me on this, I want to show you why this is so relevant in today's market. Looking at my next chart, you can see, you know, in earlier there was an optimism, you know, the boogeyman, inflation rates seemed to be coming down, interest rates were coming down, and stock prices went up. What happened the first 2 months in Toronto? Prices shot up extremely in the past couple of months. In the last month alone, prices in Toronto were up 8% because of that optimism, right? And what's not in the data yet, and it's still, again, housing market is a lagging indicator, is now the return in pessimism. You know, inflation is stubborn, we got bank failures going out left and right, full-on banking crisis are ongoing, and stock prices are down. And that hasn't been reflected again in the housing market, but that can probably be used as a proxy to predict the housing market in the next few months, where the positive sentiment that we've had over the past couple of months may be short-lived, and those buyers that were waiting on the sidelines over the last year and they bought in early this year, there may now be a lot more buyers left on the market, which means we may see an inventory buildup. That's my anticipation. I may be wrong, but that's what I anticipate is going to happen. And so what does that mean to you? What does that mean to you as a buyer or a seller? Again, as a seller, I still think this is a pretty good market to be selling. Despite all that's going on, prices are holding up, and it's probably because of some investor speculation at this point. But as a buyer, I want you to be getting a deal. This is not the time to be speculative. If the deal is not making money, don't do it. You know, unless you want to live in it, and then even at that point, you want to make sure you don't rush into a deal and you get a good price on your purchase. I hope you enjoyed this video. If you enjoyed the content, please like and subscribe. And as always, please call Adam. Thank you.